Speaking about numbers, we have Godrej Consumer Products, which reported a largely in-line set of numbers. The fourth quarter, the volume growth was slightly higher than street expectations. The company is betting on innovations going forward and the consumption sentiment improving. Along with Shilpa, I discussed the numbers with the MD and CEO Sudhir Sitapati, along with the CFO Aasif Malbari. Let's listen in.
My sense is that in the next 12 to 18 months, demand conditions should improve overall. There's been the story of urban went up first, then rural. I don't really look at it like that. I just look at totality of consumer demand. And the reason I think that demand will be better in the next 12 to 18 months is I think food price inflation is down, and I think it's structurally down. I think the various government schemes of the tax rebates, the various government schemes that are going on, and even the pay commission that will come up will generally be good for FMCG or consumer demand. So I think these two are the change events that are probably going to mean better consumer demand in the next 12 to 15 months. But I'm not an economist and I could be wrong as well.
I was looking at your presentation. The one thing that stood out, you said where you could have been better is volume growth. So what is the target that you have for this year at a company level? And what are your immediate levers to pump prime volume?
I think, we must aim for high single-digit volume growth as a company. I think we ended this year with mid-single digits. We've declared 5% for the year volume growth, which is not bad, but it's not good enough. We'd be happy with a couple of 100 bips more than that. The big demand drivers, apart from consumption driving up, is we need our core category of household insecticide to do better. It's done quite well in Q4, and we hope that it does better.
And specifically when it comes to revenue and the 24 to 27% margin band that you speak about in India, what's the guidance here?
Yeah, so I think we did get impacted on margins because of the palm oil prices. As we're seeing early signs of palm oil prices come down globally. We are hoping that as we kind of wind down our existing stock, margins should start coming back towards the latter half of next year.
Wanted to talk about the categories of the future that you identified during the presentation also. Can you quickly run us through what the plan is there with respect to how and which are these categories and how you're working on them? And also right now soaps are about 40%. That's majorly bringing in the business. How do you see the mix then also changing going forward as you focus more on growing these categories of the future as well?
Yeah, see, about 37% of our India business is soaps, and it's a 99% penetrated category. So it certainly has its limitations in terms of volume growth that you'll get from soaps, and that's the reality of the situation. So it's important for us to extract value from soaps and pivot to faster growing categories of the future. And there are 5 or 6 categories that we have focused on. Air care, perfumes and deodorants, sexual wellness, laundry liquids, and pet care. These are the 5 or 6 categories that we think can be explosive growth categories in the future. And we've got to move our resources into these categories because they need market development and a lot of investments in order to meet their potential.
So how does your revenue mix change over the next, say, 5 years or so, if you are looking into the future?
See, the revenue mix, soaps pricing is a little unpredictable. So, soaps, while the volume growths, I think will be range bound in low single digits. Value may change a little bit depending on currency and on soap prices. So it's hard to judge how fast can soaps grow. Soaps can continue to grow at double digit if palm oil prices go, or let's say the rupee devalues, etc. But if you take volume, which is the right way to do it, soaps will likely to be a low single digit volume growth category. These categories of the future should be high double digit, mid-teens kind of growth categories is what these should be in volumes. And then value depending on pricing. I think the categories of the future will have probably 3-4% pricing. Soap pricing is a bit variable.
What about the international business? Indonesia, last quarter just about 1% in terms of revenue. Africa is recovering, but we still haven't, seen a great amount of performance or recovery in the Indonesian part of the business over the last couple of quarters. So what's your prognosis for these?
So I think on an average over the last 2 years, we actually kind of stabilized the Indonesia business as close to 9% CAGR growth. So we're quite happy with the way we've put in structural interventions, both in terms of product, in terms of stepping up investments behind the brand and in terms of distribution. So it's been a steady ship over the last 2 years. Last quarter, we did kind of have some challenges in terms of the pricing growth because of multiple parameters, but good 2-year performance on both top line and bottom line in Indonesia. When it comes to Africa, again, it's been a big financial reset. We were operating at single-digit margins. We've kind of taken margins to 15%, 5 quarters of significant profit growth and margin reset. So I think we're happy from where we moved these businesses to where they stand. Now it should be a sequential journey of ensuring that we get range-bound top-line growth and we get a profitable growth. And that's what the idea will be.
What would the range be when it comes to top-line growth and profits as well? I remember the last quarter we spoke, you said there are 300, 400 basis points further of margin headrooms in the international business as well. How long before we get there?
So I think the last 2 years has been very sharp improvements in the international business. I think the entire total international business put together was at EBITDA margins of around 10%. We moved it to 13 and to 17. So it's been very sharp increases. We should get to the entire complex of international businesses getting to 20%. But now it's going to be a slower journey of a few bits improvements happening every year. But that would be the journey we would kind of take forward. As far as growth goes, I think we are going to pivot the growth onto some of our blockbuster products which we have, where we have a competitive edge. And hence, it will be about how do we take these to more countries abroad.
These are the hair color and those products.
These are products like Air Pocket, these are products like shampoo, hair color, these are products like HI, LV, etc. So we know we have some really great products. It will be about how do we kind of distribute them to more countries across the world.
Right. You don't want to talk about the pet care business also. You identified that as one of the next big bets that you have. You've done a small launch right now as we speak in Tamil Nadu. Can you run us through what the nationwide launch plan will be there, the nationwide rollout, what the plan there is, and what's your big bet on this business? How big do you see it? Do you think you'll be able to replicate the success that you saw with Fab?
We've entered this category as a test launch in Tamil Nadu. These are all very long runway businesses, and one shouldn't get impatient. One should kind of, figure out the market. We're also new to this market, understand it, and kind of once we get all of it right, then roll it out. Whether it is as successful as other categories, only time will tell. But I think the important thing for a company like GCPL is we shouldn't get fazed by early failure. One must expect. One can hope for success, but one must expect failure when you do these kind of things, good odds of failing. And one must kind of internalize that and say, okay, we'll fail once, we'll fail twice, but eventually we'll succeed. And that's what we will do, hopefully, in pet care.
So let's wrap it up with 2 things then. One, the Raymond portfolio. A year of consolidation, a year of trying to tweak the products, the SKUs, etc. What's the outlook here, prognosis? And second, it's Fab. It's a 250 crore annual run rate in terms of revenue business. Obviously, the TAM is a lot bigger here. What's your growth target here? What's your aspiration?
I think the answer to both questions is similar. So maybe let me shoot it off by saying both these are categories that have massive growth potential, liquid detergents and deos and fragrances. Yes. And again, we're not fazed by success and failure. We've had early success in Fab, but we could easily have failure next year, but it doesn't mean much. I mean, similarly, we've had some ups and downs, some rocky starts in RCCL, but we're very excited with the innovation funnel that we're launching as we speak.
What's your right to win in Fab? Because, yes, you've got success, like you said, but there are large incumbents.
And you have newer players that are disrupting the market at a lower price.
Till 5 years ago, we were 70%, or 7 years ago, we were 70% of the liquid detergent market in India. So the liquid detergent market in India was built by Easy, yes, which is very much a Godrej brand. To answer your question on right to win, right to win is determined by 2-3 things in our category, actually 2. One is the product differentiated and do consumers like it? And is it an exciting brand that consumers kind of identify with? We think that Fab has got potential on both dimensions, and hopefully it'll get better with time.
All right, that's the management of Godrej Consumer. 8 to 9% sort of volume growth is what they're guiding for this year, along with sequential improvement in margins. For the next 12 to 18 months is where they expect consumer sentiment to bounce back as well. Should bode well for the FMCG sector at large, if not Godrej Consumer